Good evening, everybody. Hope everybody's having a fine. Oh, it's October 22nd. October 22nd. In the north, it should be lots of leaves blowing around. All right. Let's see. Jim, we can have the room open. Oh, if it's privatized, just coming this way. Uh, whatever. Whatever's best. Okay. Whatever. Okay. All right. Let's do. As we can see, we had a strong move to the downside today, which could have kept us right on going. But when they closed it right back up here on the support level and a double support level, where it bottomed here just last week, and right here on the 50-day moving average, that still kind of implies that this may have been the bottom right here, and that we were in this sideways range. The Nasdaq also held this downward trend channel. So once again, the advantage we have as far as using candlestick signals is today we saw a little kind of a harami in the Nasdaq with stochastics near the low end of the trading range. Gives us a better sense that maybe the selling has stopped, and we'll have a much better sense if we wake up tomorrow and the pre-market futures are positive. That tells us we probably want to cover some short positions and add to the long positions. Jim, are you seeing something from George? I'm not seeing the comments. Yeah, don't want to, Jim. If people are making comments, I'm not seeing them. Let me see what. Okay. Well, let's test it. All right. And the S&P also kind of holding right here on the support level. All right, so that gives us a good opportunity to decipher what to do tomorrow on the open. And I'm using the term on the open because some of the questions I've been getting recently in the private messaging is that I'm having problems making a profit because I don't seem to be getting in early enough. And I'm going to kind of go through that today or this evening of how we kind of rectify that, how to make yourself get in a little bit earlier. So let's run through the commodities real quick. Crude oil is still taking a dump. I still think, not taking a dump. I didn't need to see that. Still downwards. I still think we're going to see it in the 80s. I think we're going to see it come back down here and test this level. This looks like a bearish J-hook pattern setting up. What else do we have? Gold. Gold is just rolling over. Now it's in the oversold area and it's at the 50. It's almost same scenario as the Dow. Except we've got a doji right here, which makes this very simple. A positive open tells us they're going to support on the 50. A lower open tells us they're going back to the 200. Silver just under the 50. So that makes it more critical that it needs to open positive to come back up. If it gets stuck underneath the 50, it means they're going to take it down to the 200. All right. I'm still not confident. Somebody type in a question. Anybody? Yep, Jim, I'm not seeing questions. Oh, there are the questions. Okay. How old am I? 59. My birthday was September 27th, and I didn't get anything in the mail from you all. Yeah, I was sorry too. I sat here, and even my mother, I had to bang her card, and no money fell out. So, all right. What else do we want to look at? The grains. I'm starting to pick up some of the soybeans. Soybeans had kind of a morning star signal, came up through the T line, now it's trading a little bit positive this evening. This one could have a bounce. Now here's what I don't know where this came from, so we will hide that. This is what I kind of target for. We're trying to find everything possible to come up with a target. Is that my target? I can also add the Fibonacci numbers on here and say, where's my retracement? If it started from up there and came down here, that's right about smack dab where the 50% retracement is. So, okay. I wasn't looking for birthday stuff. It was just, yes, that was weeks ago. I was just answering the first question I could read. So anyways, we're looking at the, the soybeans to head higher. Wheat, as you can see, has been in this downtrending channel. But that's why we want to watch it. If it breaks above this downtrending channel, it means we could have another big move to the upside. Now, the nice thing about commodities is it is purely based upon supply and demand. So, we're going to get all the information we need in a commodity chart telling us what the prospects look like for new crops coming in, how big they are, what the weather is like, that sort of thing. So, much less outside influences as far as moving the price around. So corn, as we can see, came down, stopped with this big bullish engulfing. Now kind of slowly coming up. Watching corn just to see if it can break the 50. Means we'll probably have a little bit of a pop. I'm still in half a position of cattle. When it did the kind of the stutter step, came up to the 50, failed, came right back to the T line, picked some up today, a half a position, actually right in here, which is trading a little bit after hours here. So that's, I haven't even looked at hogs. Hogs might be starting to pull back. And where would it pull back to? Maybe not all the way back to the 50, but if the 50 keeps coming up, that might be the target. Does live cattle look like a possible blue ice failure? No, a blue ice failure usually has your your major moving averages, I mean, the 200 should be down here if it was going to be a blue ice failure. Right now, to me, it looks like more like, because your stochastics are not in the overbought area. They're still slowly coming up. So that means it looks more like a blue or a T-line crunch coming in back into the 50. So there's nothing to tell us, and we haven't had a reversal here. There's no reversal signal here. So it came back, tested the T-line. Now anticipating it's going to start moving up a little bit. Okay, what else do we have? Cocoa. Started buying cocoa today because there was the doji gap up and then bullish confirmation. Tells me there's probably still some more upside. And with a gap up consolidation, gap up, we should be pretty strong on this one. Should be testing higher levels. All right. Gold, silver, dollar. That. Well, shucks. Well, for crying out loud, what am I doing? Writing a novel here? There we go. When applying the Fibonacci retracement, what is the most frequently? I don't know the answer to that. All we know is that the 38, the 50, and the 62 are numbers that everybody watches because they are reached quite often. So it's not necessarily trying to quantify which one of those retracement levels it's going to reach most of the time. It's more being able to have the ability to see at which one of those levels are we starting to see candlestick reversal signals. So, yeah, you don't use it as one that you're going to use as a predominant target. You use them as targets, and then once those targets are reached by your candlestick signals, you see where the true signal is showing up. Say sugar, nothing there that would get me excited trading one way or the other. And somebody said the other day cotton was just running like a scalded dog. It was up pretty big now, taking some rest in here. Can't think of anything else. Oh, Roy, where have you been? Okay, still some good-looking charts out here. We're going to get to how to take advantage of some of these price moves from the get-go. And most of the time, it's going to be people just having confidence of getting in when the setup is right. All right, first of all, we're going to look at a few that we've been buying. There's GM CR. Today did a doji. This makes for a perfect entry tomorrow. If it does a positive open, we've already got the bullish move, got the consolidation. Now we're looking forward to just come back up through the 50, and you should have some good running room. There's a gap up here still that needs to be filled, so that's going to pull it to the upside. We recommended RNF. Oops, I need to get light here. All right. RNF, also the stutter step, where it came up, pulled back right to the T-line, did a doji. If this opens positive tomorrow, you definitely want to be a buyer. If it opens negative, obviously you want to get out of it immediately, because what it's telling you is they're going to come back to the 50 one more time, and you got to look for another buy signal. Getting pretty loud and pretty soft. It might be just I'm getting excited sometimes and yelling into the mic. Coffee. Okay. No, thanks. I'm all right. I just had a Diet Coke. I love doing that. Coffee's got a good-looking chart. Makes this very easy. A positive open tomorrow, you definitely want to be a buyer. I will write that one down. That's a good looking chart. Okay, copper. Is that this one? Copper still on a downtrend. Notice your hanging man and your gap down. Stochastic still heading down. You're getting close to the oversold area, but it doesn't look like it's going to try to support. Let me see if I can find a more complete chart. TPAZ2. There you go. Okay, trading a little bit after hours, up a little bit. But notice what it did. It broke this kind of this downtrending channel in here, but still right on the downtrending channel here. But it's trading below the 50 with still some more downside. When you see the type of doji signal with coffee, do you want to buy pre-market? How long do you wait? I don't know whether you can buy pre-market in the commodities market. At least I've never been able to. All I know is as soon as it opens and it's opening positive, I'll buy immediately. And that's what we're going to get to. Jackson, yes, that's the type of question we want to get to is what makes you move immediately on some of these trades. So as we go through here, let me get to the ones that we've been looking at recently. AFI is another one that's moved up nicely. And should have stopped out somewhere on Friday. However, notice what it's done. It's closed back up above the T-line today as a bullish harami, which tells us the selling has stopped, and it's above the T-line. Makes this very simple. If this opens positive, wherever you got out, whether it was here or here, you probably want to buy back in. It tells you they're still taking it up. What is load? Is that a stock or a commodity? Oh, Comstock Mining. Yeah, it looks like it's got a stutter step you can buy, but I'll get to the individual stocks if we have time afterwards. We're going to kind of cut things off short today because the Steelers have already played, but there's still a debate to go on. All right, Steel IQ Core coming up nicely. I think it can still pop up here to the 50. Now, one of the questions we had, which I was going to address, is earnings. What do you do with a chart before earnings? And you've probably heard me say this, is that the chart is the cumulative knowledge of everybody buying and selling. So with that factor, if they are buying right before earnings, you've got to figure there's lots of people out there that are following that stock or that commodity a lot closer than we are without big, large research capabilities. So all we can pretty much assume is that the smart money is buying right before an earnings report or selling right before an earnings report. So the probabilities are usually fairly strong that the chart is still going to maintain based upon what the earnings do. Now, the other side of that is, aren't there surprises? Sure, there's surprises, and that's why they're called surprises. But I would probably recommend or observe that for every time you see a negative surprise based upon a candlestick chart on an earnings report, you're probably going to get 4 or 5 good surprises to the upside or the direction you think the chart is telling you. That doesn't matter what they use. If you're an institution in Cedar Falls, Montana, and you like XYZ, and you think the earnings are going to be good, you're probably not going to buy the options. You're probably going to go in and buy 70,000 shares of the stock. So options are for the traders. The stock is for the investment money. So the chart is still going to reflect what people are buying or selling based upon the stock. Before I buy a future or a stock, I can get most of the information right off the daily chart. Mainly because we're looking back about, how many months? 2-3 months. But this is the information right here that I'm interested in. What's happened here recently? It's gotten slammed. Now the building or the buying is slowly building up. And where kind of this, there's that little rounding bottom. Now it's pulled back right to the T line. Earnings are coming out tomorrow. But I would suspect with this company, earnings aren't as big an influence as I think if I've read the details that they're trying to get a Alzheimer drug approved. That's what's going to move this stock, not so much the earnings. Wouldn't the smart money pre-earnings likely be in options tradable too? Yeah, you're going to, again, I'm not going to necessarily, but now you're talking apples and oranges. Is the stock moving up going into earnings? That's what we want to know. Are the options going up? That's probably a side factor to all that is, yes, the options are being bought heavier going into earnings. So those are clues, but my first clue and my most convincing clue is that the stock is moving. That's what people are going to be buying. The big money is going to be buying. Most of the big money has too much money to just be able to go out and buy options. Usually, Andrea, probably 2 or 3 days at most, prior to an earnings report. When did they announce earnings? Right here? Oh, that was the day that they did it, during the day. Yeah, let's see. So from right here, it looked like they were buying, but from right here, it looked like they were selling. So again, this would have been something that if I own the stock, which I don't, and I was anticipating they're going to announce good earnings, I would have still had a stop right here to tell me that that wasn't happening. So even with analyzing the chart, you've always got the visual capability to say, if this isn't working, where do I want to be out of this position? And that's what you should be doing with every trade, whether it's going into earnings or not. If I'm buying right here, where do I not want to be in this if things aren't working? So let's see, example, SNDK looked good at the open after the earnings sold off dramatically. I have SNDK on here as a yes, and this is another case too where before going into earnings, things didn't look good. If I was short, of course, I would have been very unenthused with this type of open, depending on how fast. I mean, this is probably a case where you probably close out the position. But once it came back down here, that told me a whole different story. So I might have gotten whipsawed on this one, but now I'm going based upon what the chart is telling me. This one I've got in my list of shorts that if they open this lower, what do we got? We have a belt hold, bearish belt hold with a doji sandwich setup. This makes for a perfect short trade if this opens weaker tomorrow. Stochastic's heading down. So there's going to be times when, again, the information we're given doesn't quite fit what we want, But we've got to analyze what that is after we've seen it so we know what to do next. And in this case, if I was short, I would have probably have covered up here, but now would have may have re-shorted as it was on its way back down, because if this was going to be a kicker signal to the upside, this is the direction it should be going, not this direction. Does a belt hold span 2 candles? No, belt hold is just a 1 candle, a 1 candle situation. That's the belt hold right there. Gapped way out of the trading range and came back into the trading range. Okay, let me go through this, or we're all going to have to tape the recording or the debates. ANR, still a good-looking chart, and this one did a double doji, which was, came up, did a doji, opened positive. This one you can still be buying on a positive open because nothing has changed in your trend. Your consolidation was right here. It was not very decisive. This is what's telling you is the decisive move. Another one, ACI, setting up where, notice where this doji occurred, back up to the top end of the previous day's trading, which makes this very simple. If this opens positive, you've got somewhat of a flutter kicker during this uptrend. You want to be a buyer, and we're anticipating that once it gets up to the 200, then we watch to see whether they break it through or they fail. But tomorrow will be tomorrow, if they open a positive, where do you think the possibilities are they will be able to take it to? Probably right up to the 200-day moving average. So even if you're a day trader, this becomes an extremely high probability trade situation that's going to take you right up to the T line or the 200. You shouldn't have gotten out there because of bearish engulfing. Peter, which one were you referring to? Oh, here. If you'd gotten out, remember, you need to see a candlestick sell signal and a close below the T line. We had the candlestick sell signal, but we didn't have the close below the T line. Now, had it opened here, yeah, it closed out the position. But on this one, there was nothing yet other than a sell signal in the right place. We just needed that final confirmation that it was going to trade below the T line. Most candles have wicks and tails. Many gaps up and down may wick back toward the previous day's close. With a gap in your favor, do you buy at the open or wait to play the effect to fill the gap before entering? No, I buy on the open. Because we know that once a candlestick opens positive after a candlestick signal in the right conditions, the probabilities are that it's going this way. The fact that it might come back a little bit before turning around and heading back up, yeah, it could do that, or it could take off without me. And if it took off without me, it was taken off without me because I analyzed that if it opened positive, we were in a positive trade. So I'm not trying to fine tune my trade so fantastic that if it came back here and pulled back 20 cents, that I was able to get it right back on the pullback at 20 cents. If it pulls back, where am I going to buy it? I'm probably going to buy it if it showed enough strength to come back up through where it opened again, because I want to be buying when I'm confirmed that the buyers are with me versus that seeing some profit taking. So if I see a buy signal, a potential buy signal, and it opens positive, I'm buying immediately. I already know on a trade like this where I should be back out of this position. And that's if it came back down below this point. If it opens positive, I know the probabilities are pretty strong that it's going to keep moving in the direction I think it should. Which our simple doji rule is, it's going to move in the direction of how they open it. When you say that you buy when it opens positive, what is the time charts that you use and how many candles are you looking at? Well, I'm still looking at a daily chart. This one, if I was deciding I was going to buy this tomorrow, I'd have written down on my pad, buy ACI if it opens positive. So I'm going to be buying immediately based upon that I see the pre-market futures are flat, down just a little bit, something that's showing me that they haven't pulled the plug and the market's fallen out of bed. And if the market is showing pre-market futures are positive and this is opening positive, then I'm just buying at the market on the open. Do you sell stop? Do you sell stop at the open? Do you put a sell stop? Oh, do I put a sell stop? Not necessarily. If this opens positive and starts trading positive and the market's moving all right, then I might come back and put a sell stop down here. But remember, the probabilities are pretty strong that if it opens positive, it's going this way. So we will get to we will get to this a little bit more. If you buy immediately, do you get out the next day or based upon previous candle/time? If you buy immediately, do you get out the next day? No, sometimes I get out the same day. If this opened positive and it started coming back down and trading below here, I'm probably closing out the position immediately. Because what do I expect it to do with a high probability if it opens positive? To go this way. It shouldn't be going this way. In this example, where would you stop out on that day in case of a midday reversal? Today's open. Well, yeah, if it opened here and started coming up, I would probably still have put a stop right here that it shouldn't come back down below this level. It should, remember, they're going to move it in the direction of how they open it. Now, if it opened, moved up, came down real quick, and I could see that it was just kind of bobbing around, I might not panic just yet. But if they brought it down here and they sat it there for 20 minutes, that's telling me that they're selling this, they're not buying it, and they'd close out the position. Most of the dramatic moves at the open will blow right through your stop. Probably. How many stocks per day do you track for potential trades? Just those on the daily picks? No. That's why I teach everybody, that's why Saturday when we do our scanning, why I'll show you how to set up your different scanning and how to evaluate which ones are the best picks. What I'm trying to do, if I know I need to buy 1 or 2 positions tomorrow, I've gone through my scans tonight and I've picked out, doing the initial scan, I know there's probably 30, 40 stocks that look good. Some long, some short. The reason I'm looking for both long and short is because I don't know which way they're going to take the market tomorrow. If they open it lower, obviously I'm going to hit the shorts. If they're taking it higher, I'm going to hit the longs. But I might have 2 great picks that I think are the best ones for the next day, but it's probably still on a list that has 3 others on there that are those best 5. I picked 2. Now, if those 2 don't open properly or open like they should, now I just kind of go back to the other 3 and see which ones of those look like they're opening properly. If none of them look good, I have just pulled those 5 off a previous watch list previous watch list that I analyzed, and there may have been 10 on there, and I picked out the best 5. Well, that means there's 5 more on that list that I can be looking at to see if they're opening correctly. So just because, and that's why when I tell people, don't get locked in on using my stock picks. I'd rather have everybody learn how to do their own scanning, so that, and when they get done scanning, if they see one of mine on their list, they say, all right, that might look pretty good. If they don't see any of mine on their scanning list, they say, well, these 2, Steve, looks like they're pretty good. Let me add those to my list and see if they're any better or any worse than what I've come up with. Exactly. Teach you to fish, because depending on your trading technique or what you're looking for, I'm looking for the best trades. Somebody else might be looking for the best trades in stocks that are over $40 because they want to put option trades on. Somebody else may want to just be trading stocks that are trading at 90 cents to $2. So me coming up with a stock pick at $5 and another one at 24 may have nothing to do with what each individual is trying to do in their own trading strategy. Yes, that'll be useful for Saturday. All right. I'm not going to ignore your questions. Let me get through a few more of these charts, or let me just run through a few, and I'll come back to everybody's questions. This one is a kicker type signal. Opened positive today. Did a doji. It can still be bought on a positive open tomorrow. That's the signal right there. You have an uptrending stock that has pulled back. Now they've kicked it back in an upward direction. Keep an eye on CD. And CDE is one that we've had in the hoppers for a while. Look for it. Now, kind of done a little morning star at the top of this resistance level. If this opens positive, we're looking for this to go into wave 3, which means now you have a good strong run ready for it. Oh, shoot, Neil, I don't even know what, I hope we don't have a difficult password for Saturday. Yeah, at my druthers, we'd use password for the password. OVTI. For some reason, I had OVTI on here. An inverted scoop pattern. So if this one trades back below here, we want to be going short on this on the inverted scoop. We've got a few of these mixed in. ZAG is starting to roll over. This one, with that slow rollover, if the market opens weak tomorrow and you see this one opening weak, you want to start hitting it because you probably got at least a 10% move back down here. And I say a 10% move. When you see them roll over like this, that's where the panic or the where they start pulling the plug and they start dropping it very, very quickly from there. XRTX. Somebody, who was it in the chat room today? This one looks very nice. And look at look what the chart is telling you. Fry pan bottom. They're just about ready to break it out from here at the 20, and there's a gap. So if they open this positive, you definitely want to be a buyer immediately because you know you're going to at least have some running start on some profitability coming up to this level, and then coming up here probably equates to where the 50 would be coming to. So this has all the makings of a good trade. Let's see, S.MMR was, I think, a short. Yes, there's a kicker type signal. Now this is a booster move. Like an evening star, kind of a kicker type signal. But when they take it up and then they slam it the other way, that means people are in a hurry to get out. Now look what we have. We had a doji today. Stochastic's heading down. What do you think you want to do if this opens weaker tomorrow? There's your doji sandwich, which has the possibility of having this type of magnitude move. So these are what you want to anticipate. If this opens lower tomorrow, the probabilities are extremely high it's going this way. Whoops. So if you're having difficulties making a decision, as long as you know the rules of the simple doji rule, or okay, I guess that's what it is, Scantech. If you're all set and you know that everything's set up for a right move in the right direction, then just do it. You don't have to hesitate because the probabilities are extremely strong. Probably 90% or greater they're going to take it down if this market opens weaker and this one opens weaker. So you want to get in right away. Will it bob up a little bit? Maybe, but more than likely the end of the day you're going to be down here if this market goes short or goes weak tomorrow. That, another one that had a little doji type day with a gap up through the fifth or through the T line. If it opens positive, Probably your first target is right up here. So that's still at least a good 10% move to get to the first resistance level. ZIOP. Big belt hold. This one somebody was showing us or asking about in the chat room. Big belt hold, hammer, not belt hold, hammer signal, huge hammer signal. And a lot of people ask, says butts. I don't have volume on here. This had a big volume spike on this day. And a lot of people ask, well, does volume make any difference? Volume makes a difference. If you're in a downtrend and all of a sudden you have a huge day with a big volume spike, that tells you a lot of stock has been taken out of the weak hands and bought into the strong hands. This one I would not be afraid to be buying tomorrow on positive trading, and all you have to do is use the 50-day movement or the T-line as your stop. How much of this is predicated on pre-market futures? Jackson, as long as you know what your setups are going to be, the pre-market futures just tell you which setups you want to go with. Some of these setups are going to be getting ready for a weekday. If we wake up and the pre-market futures are down 60 in the Dow, we know that they're taking it down. They didn't pop it back up above the T line or the 50 or whatever. It landed on the 50 today. So we're still in a downtrend. You want to be hitting the shorts immediately. On the other hand, if the pre-market futures are up 50, 60, you know that they're taking it back up above the T line. So it helps you tonight. When you're done with your scanning, you should have 3, 4 positions, 2 anyways, going long, and 2 going short. Now you have them all set, ready to go, and if tomorrow the pre-market futures open one way or the other, you're going to have trades ready to go immediately without even having to think about them. All they have to do is be opening in the direction that you're expecting them to. All right, let me still go here. What did we just do? IPGP. What is that? IPGP. That looks a little bit better. This to me is a perfect stutter step. Came up off a buy to your dojis, ran into the first resistance level, pulled back to your T-line, did kind of a bullish engulfing. If they open this positive, you want to be buying immediately. They're probably going to take you back up at least to this level and test that level. Here's one that will probably go on the buy list today. I think this was more of a doji over on TCNet. The long-legged doji, bullish confirmations, cradle or a scoop type pattern. This one you could definitely want to be a buyer if it opens positive. GEOY, we recommended as a short, I think. Forgot what day we recommended. Yeah, if it opened lower, but this was a couple of days. I can't remember what day we recommended this. This was a double doji day. That if it opened positive, it should be bought immediately. Well, it opened negative, so it didn't execute. However, we've got a doji right here on the T line. Makes this very simple. If they open this positive, they've done the J-hook pattern. After a breakout of this level, after wave 1, wave 2, if they open it positive, you're probably in wave 3. You can be buying this one. Again, predicated, it's being bought out? Okay. All right. At what price is this one being bought out, Peter? Whoops, I'm sorry, Randy. Yes, scoops, cradles, and J-hooks work just as well to the downside as they do the upside. That looks like an upside down scoop. But what price are they being bought out by from DGI? Okay, somebody give me the price. I'll zip along here. SSH. I'm going to keep an eye on this one. Had a big pop. It's fallen back. Now you're starting to see some buying in it again. If it comes back up above the T line after a little gap up, you probably want to keep an eye on this one. Folks can take cash or stock, but does anybody know what the equivalent price was? The reason I'm mentioning that is if you see, what was it, GEOY? If you see a stock being bought out and they've offered $28 for it and it's trading at 30, that means now there's probably a white knight or something coming into the picture where you might start seeing a bidding war. So usually if you see a stock trading higher than the buyout price, something is going on. Okay, nothing I guess going on. All right. Let's see. Why do I have this on here? I don't know. I just don't know. Oh, all right. I'm going to zip along here. International fragrances. Whoops. S.IFF. Fry pan bottom. Where's the breakout level? Right about here. And what type of signal do you see at the breakout level? A kicker signal. What's that tell you about this breakout? It's time to be buying this stock. This one I haven't looked at them yet, but I'll be looking at call spreads on this one first thing tomorrow. And what do we got? SMCI. This one was more of a bullish engulfing signal over on TCNet, but there's your kind of your double bottom setup, right with a close right here at the T line, so it makes it very easy. If it opens positive, you're probably going to get a good run back up to a resistance level. Where would you put a buy or put a stop on IFF? Well, we know the force is very strong on a kicker signal. I wouldn't want to see him trade back below the open of the kicker signal. Have the right to elect either 1 point of shares below common and $4.10 in cash. All right, so how much is DGI? Oh, I'm asking you. I can sit it right here and do it. Okay, so they get 1.7 or 1.13 in cash for this. So that's, let's say 24 plus 410, 2810. 2810. And it is trading at 2860, coming down from this level. That might be an indication that there might be somebody else out there. So anyways, this one you just want to follow the chart. The chart will tell you what's happening. If they open this positive and start taking it back up, that means they're trading above what the offer is, which means there's probably somebody else out there with an offer. Okay, belt hold on HMA. Very simple. If this trades positive, you want to be a buyer. Now, what time? We got 10 minutes. This is where you want to start anticipating. When you do your analysis, to get past this getting in too late, we should already be doing the analysis. What is the analysis on this one? We've come back. We moved sideways right to the T line. Moved up positive. If this opens positive, what would it be doing? It would be breaking out of this level right here. Then where would you not want to see it trade at all? Right here at the T line. So if it opens positive, just buy it. Because the probabilities are they're bouncing it up off the T line. Which means they should not be coming back through the T line. So this is a perfect setup for somebody that wants to get in or should get in immediately. And then if that's the criteria for this trade, is that if this opens positive, it's breaking out through here after a bounce up off the T line, after kind of a little Morningstar signal, look better on TCNet. You want to be buying immediately, so you don't have to sit there and wait. Two things are going to happen. If it opens right here, hopefully you're in early on this type of move. Worst case scenario is it starts backing right off, and you're back out as soon as it comes back down or down through the T line, which means you're getting in early, and you already know where you're going to be out because you know the probability should be in this direction. Let's see. AG. Downtrending channel. We've got a downtrending channel here with a Morningstar signal. Stochastics curling back up. Just a very simple observation. If it opens positive, it's confirming the Morningstar signal. And it's probably breaking out through this level. So now you have a wave 1, wave 2, wave 3. If it opens positive and breaking out, which way should it be going? It should be going this way. Which means if it, buy it on a positive open, they should not be able to bring it back down, especially through the halfway point or the T line of this candle. Okay. Don, I can't argue with you there. Should be a good game. All right, we got just 7 more minutes. Let me, now, what I was trying to do is say, all right, anticipate your trade. You should know what should happen on the next move. Here we've got a fry pan bottom with a breakout. This should if this opens positive, where are they taking it? Probably right up here initially. So if this opens positive, you buy immediately because it tells us we're coming out of this fry pan bottom breakout. We shouldn't see it trade back below the halfway point of this candle. If it does, you're right back out. So is this a 50-50 shot? No. The probabilities are probably 80% or higher that if they open it positive, they're taking it this way. But we already know where we want to be out of it if it doesn't work. Let's see. Let me get through some of these. OCN. If Morningstar signal, if it opens positive, what is it doing? It's bouncing off the T line. You want to buy immediately, and you don't want to see it trade back below, or you don't want to see it trade at all back below the T line. Again, getting in early on an anticipated move does two things for you. It gets you in right at the, obviously, a good price if the trade works, and gets you right back out very quickly if the trade doesn't work. Going right back to the cut your losses short, let your profits run scenario. There's a stutter step, closed right on the T line. If this opens positive, you buy immediately. You just don't want to see it close back below the T line. So I probably take very, very little time as far as when it comes time to put on a position to evaluate whether to get in or not. Meaning probably Giants are already up 2-0. Is that on a safety? Joe, if the baseball, I'm sorry. All right. WX. Let me go back to this. WHX has a 38%. Is that a dividend or is that a stock yield? Anyways, I would be buying this one on positive open. Dividend, all right. No other competitors for DGI that we know of. Either that or GEOY may be turning down that offer and want something higher. Do you use, or like anything else? Yes, Metastock is another good scanning. All right, but they're trading up above the asking price or the bid price. So that means something's happening. All right, let me get through this. We've only got 3 minutes. Let's see. BONT. Pull back to the 20. This is another one that if it opens positive and starts trading up through the T line, you want to be buying immediately. You're in an uptrend. You've had the pullback, which was not very decisive now, and you're in a trend channel. So these are all things that you want to be putting into your head or into your mind's eye before you even make the trade. That's what will move you faster on getting into the trade. Do your scanning techniques only apply to TCNet and Metastock? No, they're going to be based on, I'm going to use TCNet because any formula that you can write for any of these are going to be able to apply to any charting technique. All right, we recommended Nile today as a short. If it opens lower tomorrow, notice how it's rolling over and staying below the T line. You can still be shorting this one. Angie, we've been short for a while, but notice what it's doing. A doji. If it opens weaker tomorrow, you short immediately because you'll have your doji sandwich. Doji sandwich comes in very handy on the short side, as it does on the long side. This is more of a doji. Breaking down through the T line, a doji, and then slamming it down. This one, Senta, probably is going to come all the way down to the next moving average. Same scenario right here. Bearish J-hook. If it opens weaker, you've got the J-hook moving. You're breaking this level. You're probably heading all the way down to the 200. All right, we're going to go through some of these real quick because we've only got a couple of minutes. Fire. If this opens weaker tomorrow, you're still in a downtrend. Notice you've got your gap down from a doji through the T line. If they open it weaker, they're still taking it down. Rovi is a very good one right now on the short side. Whoops, let's make this big enough where it means something. Bearish J-hook, doji. If this opens weaker, especially if it comes down through this level, you want to be shorting it. Probably have the same magnitude move as this wave right here. TSO, put a sell stop right here at 37.49. If it comes down through there, you've rolled over with a bunch of dojis. You're probably heading for the 200. Ruby Tuesdays, no. Evening Star Signal, doji, right below the T line. If it opens weaker, you want to be shorting it. It's a failure. VCI, doji sandwich, if it opens weaker. CFX, doji sandwich, if it opens weaker. APKT, another doji sandwich if it opens weaker. These are all excellent shorts because they're failing the T line. They've got sell signals. They've got a doji. And if they open weaker, they've got a doji sandwich in progress. If this doji sandwich was the same magnitude as this, where would it put it? It would have put it below any of the support level here, which tells you there's probably much more downside. The debate is starting. All right. SanDisk opens lower, short it. FCS, bearish J-hook, already in progress. And this will be the last one, NXPI. Bearish J-hook in progress. Whoops. Got to show this one. This is Best Buy rolling over. Okay. Thank you, everybody. Sorry to cut it off, but let's go see what the politicians have to say. We'll talk to you tomorrow.